Hello all, welcome to Sand Compounding. This is Sandeep, Anand. I'm starting a new series called 20 for 2030. And what does that even mean? For investors, in investing, the formula of compounding, which is very powerful, and the formula is P into 1 plus R by 100 whole to the power N. And N is an exponential factor. N is nothing but, we all know, it's a time invested, time we invest in the capital is invested in a business, or the tenure as we can call. And the tenure or longevity of our investment is very important because if we make investments in businesses that can sustain for 10 to 12 years with a good level of growth and at the right valuation, we are made home. The returns on the capital invested would be very high. Now, how do we find businesses which can run and which has such longevity of 10-12 years, especially in today's world of disruption? Every business is getting disrupted. Erstwhile, no wonder Warren Buffett, the legendary investor, used to find businesses which are least disruptive and that can run for a long time with growth, and he called it as moat. While moat investing, I don't know if it's really that relevant in today's generation because all businesses are getting disrupted with the advent of digital and mobile and internet. Now, identifying such businesses is a very difficult task, and I have tried my best to find out 20 such businesses which can pay way till 2030, and come 2030, in hindsight, these businesses would have been great to hold for such a longevity period. Now, how do we find these businesses? I've applied the principle of inversion, which I learned from Charlie Munger, and we look forward to 2030, and when we look back in hindsight, the inversion principle, based on that, what businesses could and why those businesses could sustain till that period is what I've done. So here are such 20 stocks, and one most important thing, not in investing, not all businesses are great investments at all point of time, but most point of time. So there could be reasons being valuation is one important factor which can control the time when we enter into a business. If there are frothy valuations, our returns would be mediocre. So it's very important to identify great longevity, great businesses which has longevity and at the same time that has good growth and the right valuation. So, but this could be a blueprint or a watch list that we can use to identify, and when the correction happens or recession happens, these great businesses could be a great entry point, could give a great entry point. Hope this gets interesting as we move on. The next business in my 2030 list is the leading Chinese e-commerce player called Pinduoduo. Pinduoduo was founded by Colin Huang in China in 2015, and it has gone ahead and become third largest e-commerce player just after Alibaba and JD. Phenomenal growth. And Pinduoduo has done this targeting the second and third and the remaining tiers of Chinese population who are yet to get into the internet world or digital world. Pinduoduo had grown stellar revenue and gross merchandise volume in the last decade or the last 4 years, and let's see and analyze how this is poised to grow in the decade ahead. Then coming to Pinduoduo, which is the presentation, and coming to the slide, the heading I have put it as rise of the Chinese e-commerce platform. There is nothing new here. I mean, with Alibaba and JD ahead of them, what is so different about Pinduoduo? The Alibaba already has a monopoly and JD quite has a lot of market share. So what is different about Pinduoduo? So Pinduoduo is a bulk selling discount platform, and it's a low cost sales platform. And so business overview, it's a Shanghai based social e-commerce platform that went public in 2018. Pinduoduo, founded by Colin Huang, has around 430 million monthly active users. It's a big number, and it has overtaken JD.com. There we go, in 2018 in terms of the total gross merchandise value in the $1 trillion Chinese e-commerce space. Now, Chinese e-commerce space is $1 trillion, and that's almost more than GDP of most of the countries in the world. And the half of the population, 1/3 of the population is the monthly active users in China. For Pinduoduo, it's the third largest e-commerce platform in China. Very well can overtake JD and become second. They offer a range of products from groceries, clothes to home appliances, just like any other e-commerce platform. Now, this platform has already captured around 10% of Chinese e-commerce business share, which is great, being a new firm. And they did this by providing its users value for money, merchandise, leveraging social platforms like WeChat and QQ. So it's on the background. It's underpinned by the support. Growth is underpinned by the support from WeChat, and it's a social platform, selling platform. And using Pinduoduo, buyers could share product information on popular social networks and invite their friends, family, and social contacts to purchase together. So it's a group buying, pretty much in the lines of Groupon, like how it happened in US, but it's much more than Groupon, what Pinduoduo is. So there, the culturally Chinese and Asian population are more socially binded, and they have taken advantage of the social buying and community oriented buying in China. And it's through social contacts. They purchase together through chats of WeChats. They share product catalog and purchase together as groups, and that's a very brilliant strategy to get the emotional attachment on the platform. And they not only enjoy the fun of and excitement of discovery and shopping, but also it's a comprehensive selection of value for money products. Now, so it's a two aspects, two-pronged approach. One is it's a social buying whereby they get a discount, and it's also fun sharing the information and buying things, discovering new products together. Zheng Huang is the current chairman CEO of the firm. So Pinduoduo is more savings, more fun. That is their caption, and they have Pin means together, Duo means more savings, and Duo means more fun. So that is their logo and strategy put together in the slide. Now, coming to revenues, profitability, and balance sheet analysis along segment wise, the firm reported a gross merchandise volume of growth of 144%, whopping number, standing at around $117 billion as of September 2019 over the previous 12-month period. Now, that's a huge growth, and total quarterly revenues touched $1 billion in Q3 2019, and growing at a scorching pace of 123% year on year. Now the revenues touched already $1 billion. Average monthly active users is growing at 85%. It's reached 430 million people, and 90% of their revenues is generated by online marketing services, while remaining is from transaction services. So it doesn't have a payments platform like any other players. Now cost of revenues increased by 137%, commensurate to the volume growth, and it resulting in operation losses of $390 million in 2019. They are losing money at this stage, but their gross profits are good, so they're kind of funding their own growth. Now operationally they are losing because of the investments. The reasons for the high operating costs were cloud infrastructure, they have moved to cloud, then merchant support and call center cost, driven by higher sales and marketing expenses. So they are in the initial stages, nascent stages of growth, so obviously the operating costs are high. Now, coupled with other incentives such as cash, coupon, lottery, and free products, Pinduoduo manages to acquire users at very low cost. The cost of acquisition of users is low because they are leveraging the social platforms. And although Pinduoduo claims to have several channels to lower product prices, increasing product quality and counterfeit complaints still raise concerns for an investor, right? I mean, as possible as low cost and low quality association. So the complaints of counterfeit products and low quality products is a concern which investor needs to track. I'm sure the management has taken notice of it, and probably they come over that. Now, looking at the balance sheet, they are investing heavily in research and development as well as marketing to gain market share, especially in tier 3 and remaining tier cities in China. So they are not focusing and playing on the ground with Alibaba and JD on the tier 1 cities or even tier 2. They are focused on tier 3 onwards, and that is their playing field, which is not leveled and even nil at this point, because there are not many players playing and trying to intrude into these rural areas and suburban areas in China. Now they have a cash balance of $4.8 billion as of 2019. They don't have a debt, which is good, and they are funding their own operations. I mean, they are negative cash flow. They have operating cash flow, which is positive $7.7 billion, and free cash flow. Now also they have a market capitalization of $45 billion. That is like 1/10 of the market capitalization of Alibaba or even Tencent for that matter. So I would say it's in a very nascent stage of growth. Price to earnings, they don't have positive earnings. They have losses, and so we can't bank on the price to earnings and per se. But we looking at they are trading at 12 times to price to sales in Jan 2020. Considering growth investments, we cannot really measure valuation at this stage, and unless they turn cash positive. Now they do have operating cash flows, which is a relief in terms of investor confidence. Why I think Pinduoduo is rather why is it part of the 2030 list, and why I think in hindsight might be a good idea to buy or hold Pinduoduo as a business is there are 7 points I put here. So primarily it is like they are the incumbent players, e-commerce players like there are incumbent players like Alibaba and JD, which are focused on tier 1 cities, as I said, whereas Pinduoduo is targeting the underpenetrated lower tier cities which came online recently. That means they had got their internet recently, they got mobile phones recently. They're not the flashy urban Chinese population. They are in the deepest remote areas, and they're still internet is still getting enabled there. And these set of populations from third and lower tier cities account for around 65% of Pinduoduo's total user base, and these users are price sensitive. That's another point to note. And these guys are high discount and low cost sales people, and they are well catering to the price sensitive population of China. And they also depend on and they will always depend on low cost item platform low cost team platforms like Pinduoduo. They started targeting price conscious as opposed to brand conscious buyers in third and fourth tier Chinese cities, an untapped market. So the potential is huge. It enables these buyers, often women in charge of household, to purchase deep discount products, and also inviting friends to participate and buy together. That's another great strategy. Women household buying household purchases together at a discount, getting deep discounts, and especially in low tier cities where they are very price conscious, and buying low ticket things from groceries and other things on the platform. Now their partnership with Amazon, recently Amazon partnered with Pinduoduo, and with that will bolster more revenue for Pinduoduo in coming decade. So that will bolster the revenue. And also each page on their shopping platform is dynamically personalized for the customers who are onboarding, and resembling a virtual bazaar whereby users can scroll and explore different products. Now the users get a community sense under their team purchase model. So their focus is it's a community driven social selling platform providing huge discounts, to put it in one line. And especially then when it's influenced by social shopping experience, it's fun for people to buy, and they are getting bulk deal discounts. Pinduoduo's e-commerce platform is a self-reinforcing virtuous cycle where more users lead to more volumes of sales and more discounts commensurately. Now their feed based model allows users to discover what they might have not known yet, and it's a fun way of shopping. The user teams and community based approach creates a stickiness and sticky interactive experience on the platform. Extremely low prices are compelling attraction of Pinduoduo due to bulk volume selling game, and which creates huge orders for the sellers and leaves them with more room to cut prices. So the average ticket price are way too low. It's around $6 in transaction. The company needs to focus on removing fake goods and also reducing customer complaints, along with reducing merchant dissatisfaction, to keep the growth kicking. And because they have a huge untapped market potential, they have to clean up that small things in the growth strategy in their roadmap, and there is a huge potential for growth ahead. So that consummates the whole presentation about Pinduoduo's prospects for the next decade. Hope you found this useful.